A lot of bounce backs today. NNE's up 6%. We got SHMD, which we went into this morning. We're up 25% on. So this is the one that we played yesterday. Made on the first one, made like 12% for the first time, and then lost 5% the second time. I went back in this morning when it was like $3.30 or something like that. It's up 25% right now. We got a stop loss on it of 5%. So we'll see how that plays out. Why am I playing Ryder? So again, my trades and your trades should not be the same. You shouldn't be doing the same thing I do for the same reasons I do. I am playing a dip buy on this because Ryder actually had their earnings this morning, and their earnings were not that bad. Their outlook and guidance was a little bit off. They actually beat on EPS by 3 cents, and their revenue was down 1.5% year over year, but beat by 10 million. Their non-GAAP EPS was up 4% year over year as well. For the fiscal year 2025, we had their ROE. They're expecting 17%. Comparable non-GAAP EPS, they're looking at the high end or the middle of the range, 1285 to 1305. And operating revenue was only increased by 1%. It was a very mute earnings. It was kind of like a you know what I mean? Like a And in this market, if you're not really killing it, nobody cares. However, they did announce 2 different buybacks. They're doing a discretionary repurchase of 2 million shares between October of this year and October 2027. And then they're also doing an anti-dilutive repurchase plan to purchase up to 1.5 million shares starting August of this year. They've increased it. So what I'm doing is I'm buying this right here and looking and waiting probably till end of day today or tomorrow, hopefully, for this to move back up to that 175 range. Does it do it? I don't know, but they're taking out 3.5 million shares from the market, and they have a float of 39. So we're talking about almost a 10% anti-dilutive measure here. Now, it's going to be 2 years that plan takes place, so it's not something that you're going to expect in the short term, but I'm seeing if this has a rebound. I could be wrong here, but it feels like this might be a bit of an oversell. Again, it's not me that makes these decisions, so I'm going to be hanging on to this. It's only an hour into the market, so I'm not really concerned right now. MOH is more so a FOMO play for people who missed out on all the other dips on healthcare. It's dragged the entire healthcare sector down today. This is like the FOMO of people who didn't get the bottom of UNH and all the other ones. They might be looking at this, and it's actually been holding pretty steady this morning. It's finding. I'm not a TA guy, but for TA people, you know, you're looking at this and you're saying, wait a second, this is making a bull flag here, right? Because not that I care about this, but when you look at this, you're getting a channel here, and it's looking like it's about to pop. I don't fucking play TA though. You have R shares or calls? I have R calls, but I took close to the money ones. I got 170s. So that way, if I'm wrong, I don't have to worry about losing too much. But if I'm right, then I can get a nice trade out of it. The guy who doesn't really trade options, bought the calls. Again, you misunderstood what I said. I'm not full porting all my stuff in options. I'm using this as instead of putting all my shares because I want my capital, my share capital to be able to buy speculative stuff, right? I don't want to buy options on spec stocks because the IV is too high and it's a waste. I'd rather put the shares in there. In stuff that's like larger cap stuff like this, I'd prefer to do one option so I don't have to tie up 10 grand to make 5%. You see what I mean? My speculative stocks can move 10, 20% in a week. These usually move a couple percent. So what I like to do is the large cap stocks I like to do the options on. Does Delaware have good internet? Apparently, we have really good internet at the place we're staying. Shares or calls on Oscar? Oh, I got shares. I bought shares when it hit 19 this morning. I like Oscar. I think that it's you know, in the healthcare sector, it's still a sleeper. We bought Oscar back in 2021 the first time because their main focus was on gig workers and gig worker insurance, and because everybody was going into gig work, it was good. But then when the whole spec and meme and everything crashed in 2022, it went down big. I actually sold it for a loss, but it's come roaring back because it's becoming a major player in the healthcare, especially for alternative healthcare. Like my in-laws, they have Oscar, right? Because they covers them, and you know, people that are here that are, this is a weird thing to say, but people that are here that are on visas and here that are visiting and stuff like that don't want to go to the hospital. They want to keep quiet, you know, like just kind of chill. And so they end up paying a lot of premiums without ending up actually utilizing it. So that's one of those ones where it's a good profit margin. I know it sounds terrible, but it's part of like something I look at. And so I kind of like Oscar Health. The healthcare sector's been beat up pretty bad, but I still like them. So again, that's just me and my personal, take on that. We're up really big today. We actually gained back everything we were down yesterday. Gilt is up 6%, NNE's up 6%, SoFi's up 3.5%, Palantir's up 3%, Google's up 1%, SHMD's killing it right now. WeRide's up 5%, NVX is up 4%, SGBX is up another 35% today, TSSI 4%, Joby 3%, MNTS 7%, Rivian 0.5%, STSS 5%, Poet 6%, MLGO 6%. So we got some big movers today. gaining back what we had yesterday. So all the dips I bought yesterday, I'm selling the rips today. And if it keeps going up, then I have my shares. And if it falls, I have capital to do it again. Is UUU ever going to stop going up? I actually found a weird clip from my channel from 6 months ago where I was explaining why UUU was going to keep going and uranium and everything like that. And then somebody goes, I can't understand that. And so I go, ooga booga, yellow cake, go up. Why not? All right, so what is this CS thing real quick before I move on? What is this CS thing you guys are talking about? Counter-Strike. Okay, I've heard of it. It's a game. I know that. So what is the big thing going on? Skin market crashed? Jesus, I'm thinking Ed Gein when you say skin market. CS market crashes almost $2 billion overnight following controversial knife and glove trade update. It had a $4 billion market cap. Valve made knives easier to get, which made the cost less, and the market cost value went from $6 billion to $5 billion. So they had a huge skin market, added an update which let you craft skins from the worst skins. So basically they diluted it. They just diluted it, right? They basically did an offering. They're also saying that Valve employees knew about it and bought into the red skins before the update. There's proof of buy orders in the market. Who do you think lost more money? People who bought skins at the top or Beyond Meat at $7.50 yesterday? I made 25% on my puts. If I would have held, I would have made 50%. Which is funny because I made money off of Beyond Meat playing it to the upside. I sold too early, but still played to the upside. Took that money and bought flowers yesterday pre-market, 100 flowers. That went 60%. And then we had the money in SGBX, which after hours went 121%. And that was like we were in 3 pumps. Now flowers I didn't sell at the top. I'm a little upset about that. But either way, what a fucking day yesterday was.